everybody, and a very warm welcome to episode 2 of Rethink's mini podcast series designed to edify and enlighten you about all aspects of the UAE's corporate tax regime. My name is Neil Guthrie. I lead the finance and tax teams here at Rethink, and I'm delighted to say I'm joined once again by Kirti Budamudi, who's our Director of Tax. So let's start with a recap of the last episode. We covered what corporate tax is, and we introduced you to the acronym CT. We told you a little bit about the background to its introduction and the BEPS International initiative, which you've heard so much about. When it comes into effect, the rates of tax, and who will be within its scope. So what did we learn? Well, predominantly we learned that all businesses in the UAE are in scope for CT, regardless of legal constitution, mainland entity, free zone entity, even individuals who are carrying out a business activity in the UAE are in scope, as are foreign entities with a permanent establishment in the UAE. In fact, it's probably a more accurate description to call it a business tax rather than a corporate tax. We also learned that there's not long to prepare. You need to be ready in advance of the next financial year, and some aspects of the legislation are already in effect, and we'll talk a little bit more about that in the rest of the podcast. And we also gave you our opinion that there's enough certainty around the legislation, and supplemented by the public consultation document and the frequently asked questions, to begin to plan and to prepare for the introduction of CT. So let's drill down a bit further and give you a flavor of which aspects of the business of your business will be impacted. Kirti, could you give us a view, Rethink's view, about which areas of our clients' businesses are going to be impacted?
Sure, Neil. First of all, thank you for the recap. It was really helpful. With the introduction of corporate tax, along with the associated transfer pricing regulations, every business must reassess aspects of their business as diverse and far-reaching as business model, legal entity structure, cash flow and capital structure, the clients and suppliers they choose to contract with, how they contract with them, and at what price they contract with them, accounting methods and resources, IT systems, policies and procedures, and whether they outsource or recruit to manage the tax. This is a big claim, we realize that, and we will explain that in detail with worked examples in future podcasts.
Whoa, a big claim indeed. And so businesses effectively have to be considering and assessing all aspects of their business as far as CT is concerned.
Yes, indeed.
Okay, so let's drill down even further. Can you tell me a little bit about what aspects of business, even the smallest and least complex business, need to be thinking about?
Sure. All businesses, including those smaller and least complex, as you mentioned, will need to consider aspects such as maintaining records in sufficient detail, financial reporting under acceptable international accounting standards, which are notably IFRS or US GAAP, documentation adequacy, quality, and holding period to avoid fines and expenses being non-deductible under corporate tax, digitally enabling accounting and tax functions so the data can be conveniently shared with the FTA in the future in case of audits or assessments. Transactions with related parties and connected parties, including salaries and bonuses, must be at commercial arm's length rate. Set-off of losses against future profits.
Okay, thanks for that, Kirti. Obviously, in the UAE, many businesses are constituted in free zones. So what do they have to be looking out for specifically?
Sure. As we have mentioned in the previous podcast, free zone businesses are fully within the scope of corporate tax, and they will have to strictly comply with the relevant regulations, including transfer pricing requirements, maintaining adequate substance to benefit from the 0% CT rate. We also mentioned that the definition of qualifying income is not yet published, but from the FAQs and the public consultation document available, we believe that free zone entities conducting businesses within the free zone or other free zones, as well as conducting business with businesses outside UAE, will be enjoying the 0% relief for the beneficial treatment. And we also expect that the financial statements and the regulatory compliance of the free zone entities will be thoroughly audited, as the associated CT relief, the associated 0% relief available for the free zones will become much more valuable when the mainland entities are subject to corporate tax at 9%.
Indeed. So as well as all the preparation for CT, free zone businesses on an ongoing basis are going to have to be alert to making sure that they're complying with all existing regulations to ensure that they retain that 0% corporate tax status.
Yes, indeed. But the benefits could be, of course, very substantial.
And now mainland businesses, of course, they'll be thinking, some of them will be thinking, I've got a lot of free zone customers. Can I avoid paying the 9% corporate tax on my business with free zone customers by having a free zone entity dedicated to serve free zone customers?
Yes, they should certainly be modeling and forecasting the effect of CT and start evaluating all strategic options. But any form of corporate restructuring will not be as simple as it would first seem. Some people may not realize that though corporate tax law is not yet effective, the corporate tax regime is not yet effective, but the general anti-abuse regulations, in short, GAR, is already effective from October 2022. The main purpose of GAR is to ensure that the taxpayers are not implementing any changes in their business operations or structure purely aimed at taking CT advantage. Therefore, all changes that taxpayers are considering right now should be viewed within the prism of GAR.
Yeah, so it's not really so straightforward. Nevertheless, businesses should certainly be evaluating all their strategic options. Okay, so if we take a business with a financial year January to December, what would a corporation tax plan look like in terms of timing?
Sure. For an entity with financial year January to December, the first financial year they will be paying taxes will be January to December 2024. So they should be planning the CT, understanding the CT implications, adjusting the systems and policies and procedures, creating SOPs to follow by the teams in 2023. And in 2024, they should comply with the standard operating procedures that are already set up in 2023 and perform periodical reviews to identify gaps. And in 2025, they will be required to finalize the books of accounts, get the books of accounts audited, and prepare and submit the CT return. And this plan for an entity with financial year starting after June 2023, but before January 2024, should be even in advance.
Okay, so maybe that's enough for us to cover in this podcast. People's heads may well be buzzing with all that information. So let's have a look at the takeaways from it. So first and foremost, we recommend that you are assessing the impact of CT. And we explained to you that it is multifaceted. So the thing to be doing is to be modeling and forecasting the impact of CT on your business to help you to evaluate strategic options. And of course, in evaluating strategic options, you need to be considering the anti-abuse regulations. So start the process now. There's only a few months in which to prepare. You need to be ready in advance of your financial year. And as we said, some of the aspects of the law are already in force. So please avoid overcomplacency. Don't fall into the trap of thinking that you have bags of time. So today we covered what every business, large, medium, and small, needs to be considering. And in 2 weeks' time, we're coming back with our next podcast, podcast number 3, in which we hope to demystify the more technical aspects of the provisions for you, most relevant to medium and larger corporations, and those within a group structure, and those which trade outside of the UAE. So for now, we wish you a very, very good day, and we very much hope to see you in 2 weeks' time. Thank you for your time.
Thank you. Have a good day.